Hey, good morning. FLWS. Sure. Take a look at that. I'm still trying to kind of set up, so give me a minute. Um, FLWS. I will pull it up on one of these chart windows. Unity? Yeah, I've heard decent things about Unity. Like going into the next cycles, I guess. Yeah. I want to talk about Wolf today. I'm very interested in Wolf speed because there's a potential there that I've kind of been watching it for a long time. We watched it drop off the face of the earth and have a little rebound. It needs to test down. It needs to have a strength test, I think. I'm not really sure the current strength test is enough, but I think if it hits a certain level, I think it's like 113 and it holds and then it breaks the creek, I think it might be a big, huge squeeze play, like a really big one. So we'll take a look at that as well. Today, as we get started, so I'll start with SPY, just easy because it's an ETF, so it's got kind of a catch-all approach for the big caps. Um, it's in a mixed place, so this is a strange situation of we did see an advancement across the only real like creek here, which isn't saying very much. It was just a couple hits on the top. I wouldn't call that a particularly strong test, but I did look back at the overall picture here, and you remember how we were looking at that big widening channel, and going back in time, just kind of looking at where that might go and like what that might look like. We did that analysis yesterday. I'm not going to redo that analysis this morning, but it did hit on that and reject. So I mean, there was a clear like test to the upside to 632 right here, and that's one of those fib lines, and it also correlates and coincides, I suppose, with a trend that exists locally, and then also maybe even a couple gap zones. There's a gap zone right here that really was duplicated again at 631. And so we've got the gap fill, and then it reacted pretty hard back down, at least at first. I say that because this is a decent volume pickup. I mean, on the sell-off, you can see that clearly a lot of people were taking profit, probably off the bottom. And so the question I have when I see stuff like this is the market needing to go backwards immediately, perhaps, to get to the gap that we created on the gap up Monday? And the short answer is probably. Yeah, that seems likely, or at least that's what's in view. It doesn't necessarily have to fill. I mean, ETFs have gaps all over the place. They don't get filled. But I was looking at every other ticker in the market that has association with it. And we were looking at some of the big ones like Google and Tesla and Apple. And they all have a similar gap from Monday. So I'm not finding that to be particularly encouraging, because if you advance and push resistance, that's fine. But if you push back up into a previous range, and it's debatable, right? I mean, you could say like, well, that doesn't really look like much of a range. It seemed to find a greater support up here at 635, which it didn't get to, and I would agree. But if it pushes up high into a previous range and then rejects and then falls below a creek, that's not just a push of resistance. That's usually a sign of a distributive action. So it's a question mark of like, it's the big question mark, really. Is it a hook, right? Or is it going to have continuation? And this was expected. When we talked yesterday, we talked about how there seemed to be a couple different avenues that this could take, and one would be to come back down and like retest this. I've got it as a yellow golden area, but really it's a long-term regular trading zone for the S&P 500 in the midst of this gigantic broadening. And so when I look at that, I'm like, okay, if this is a hook as we see it, which is just like a reaction back up, you would have to look below and say, did it ever really make a weakness? And I don't think it did. Like, I don't see this as particularly horrible. I don't like this. So you see how I like had this big sell down, and that's where the selling climax is. That's right here. So just looking locally, right here on Thursday, there's a reaction immediately after, and then it just kind of comes right back down. Granted, you go to like a 4-hour chart or a daily chart, that may not even be there. I don't find it to be a particularly horrible situation if it's on like an hourly. If it's on a daily and you see something like that, it's probably a signal of some kind of a weakness. There's not a lot of strength. However, you couple that with the fact that it didn't actually make a lower low, and it does present an interesting situation of like, really it's not that bearish. It looks pretty decent. So this doesn't look like a horrible hook to me necessarily. It looks like a reaction off of this big sell-off, like profit takers. Now we're reacting, and we're going to see if it holds strength. So it seemed necessary to me yesterday. I had this drawn up yesterday. It seemed necessary that it may need to come back down. So then you look at this and you think, well, if that's the case and it doesn't just continue from here, like pick up right where it's at and go, what hope is there, for an early breakout by like, let's say Wednesday, tomorrow, or Thursday? Well, there's not much. It'd have to move pretty quick. We'd have to see a drop today and then a cross of the creek tomorrow. And in addition to that, there's an additional one, obviously, that's been built out. So again, does this kind of work? Yeah, it works. Do I really have a lot of guidance on it beyond just, hey, there's a gap down below, and right now it has to kind of either build a support right here and go, really needs to get back above 632, and then we'll talk about continuation versus rejecting off this resistance and potentially, checking low. Again, I don't necessarily think it has to go super deep, but there is like plenty of gaps you could point to down below and say, oh, I think it's going to go down to 600, or I think it's going to go to 607, or I think it's going to go down to, near 615. Sure. Like we could kind of point to all those. Probably in some ways those are relevant, but I like to look locally and just see where the major creek crosses are. And this is really where it is. And that's where we are now. So to me, I'm not really necessarily expecting it to come down and make a new low. I do think it could very well kind of come down and fill the recent gap and just sort of make a double bottom of sorts before moving on. That's fine. And then we would, again, you're really looking at confirmation as coming back above this zone right here at 630. So I'm not particularly concerned about it. I just wanted to say like that. I guess yesterday we were talking about if this rallies, it needs to do this kind of a jump quick. It would basically just be like a 1, 2, and then a 3, 4, and then it could just kind of go, right? And it's the same thing over here, but, I'm just looking at it thinking we don't really know right now if it's going to break out. There's a bit of a case that, as long as this holds above the recent creek, which is trying to, you can see it dip below it here, it may go. And I looked over at Tesla this morning, and it had a short-term EMA cross. And what's weird is that that's actually a buy signal, at least on this, because of the RSI coming up as well and jumping above and holding above its moving average here. You can see that this certainly looks like a situation that could just break out. And we talked about yesterday, like it would probably back up one more time and then go up. And then weirdly, it went high first, which I didn't like. So it made another attempt at advancement and then backed up. Not really, again, super concerned about it, but it's still the same concept that we're seeing on like the S&P 500, where it's like, if it were to come back down, I don't think it would be necessarily the end of the world. And there's certainly a case to be made that that could happen, come back down to this region and try to dip low. So I'm finding that to be pretty much the same, like across the board. I looked at, like I said, Apple, Google is like the same way to some extent. Apple's a little bit weaker because it's got it's already kind of made a consolidation lower. So if it dropped, it's hard for me to see it not going down to like 196. And I think it might need to do that. I actually had on the chart this, which would play into a similar state here. It doesn't have to be exactly the right place, but this idea of like bouncing out and then dropping low. So all that being said, it would not surprise me if the market still pulls down a little bit more during this strength test period. And after that, if it holds up, I think you've got a really strong case that we are indeed going to have a very, very bullish August, probably leading into kind of a cruddy September and October. And then so like a final hoorah, right, for the market here. And then the Google is like the same way, the Google chart. It's like there's two gaps down below locally. And I had thought that this was kind of peculiar, that this jump happened, and then I thought it might come all the way back to 185. And it came to the first level of support, but not the second. Same deal. It's easy to see this is like a widening now, and that it's pushing resistance on the top. But it's certainly possible, you can see that widening structure right there. It's certainly possible that this comes down one more time and attempts to go low, before coming back out. It's also possible that this early push is a form of an early SOS. We just haven't seen it finish because the day's young. I mean, we still got half a day. So I'm thinking like right now it just looks like a wick. It doesn't really look like it's holding above the top of that structure, but you never know. So it's the same thing as SPY. Like it could have a shallow backup and kind of jump and go, but I definitely could see it coming back down to attempt to come low again. And if it fails to come low this time on the widening outward, I think it would probably be pretty bullish. So that fourth move would break out more than likely. You look super cool. Mm-hmm. So anyways, I'm not really gonna talk about the same things I talked about yesterday. I just wanted to kind of briefly go through that just to give you an update if you're watching the market on the whole. I haven't looked at small cap like the IWM in a little bit. I'm going to say it's probably pretty similar in regards to like what to expect going into August. Realistically, if I were looking at most of these charts, including the S&P 500, most of them, what they did is they got really overbought going into like earnings season. And then they've all had like this kind of corrective move. That's a pretty big drop. I mean, it was the biggest drop since May. So it's been a while. I mean, it wasn't like an insignificant drop. So it was a pretty decent sized move for the S&P 500. Was that it? Is that the correction? Is it a sign of things to come? Chinks in the armor. I mean, a lot of times, yeah, you do get these kind of early signs that like the market is starting to weaken. We've seen it on the big picture plenty of times where there's early dips that signal later, like, hey, that's a weakness, and then later on it follows through. It doesn't, to me, indicate that it has to be a corrective phase now, but I have to just kind of allow for the toss-up of, yeah, sure, we could try again as a strength test. And so that plays a lot into what we're talking about with like AMC and stuff going into its earnings next Monday, because that's all stuff that could happen like this week. Like we'll see it play out this week. And I'll talk about Wolf in a minute. I really want to kind of address that. I was eyeing it today. I think Wolf has a potential of going from like $1.50 to like 24 and then up to possibly 40. It really looks almost the same, weirdly enough, the numbers, and I think we've said this before, but the numbers are really similar to AMC, which is kind of strange. I'm not sure why. Maybe the nature of it being a distressed stock has got certain operators treating it the same way. It's clearly not in the same sector. MPW is the same way. It's like one of these tickers that like the numbers seem to be all kind of linked, but if you look at the big operators, they're all the same. It's like your Vanguard, BlackRocks, and then a few distressed funds. So I do want to get to that. And I think that's probably going to be the big topic of my day today is like, are we really going into like a squeeze season, And then the other thing I want to address is like streaming in the future here. Like, what do I want to do? with this channel. And every now and then I kind of have these hum and ha moments. I don't particularly think that it's a community thing. Like, it's ultimately going to be a decision that I make on my own. But that being said, I like to do my best to like let people know what's going on in my mind and my heart, and let people know what I'm thinking and where I'm going with stuff and what I want to do, or not do in some cases. So we were asked to take a look at a couple different things. So we'll take a look at a couple different things. We'll go to Wolf, and then we'll address some 1-800-Flowers. Okay. Well, all right. So my impression of 1-800-Flowers off the get-go is that it's a pretty smart business model. Like, I don't know what their bottom line is. I just know a lot of people that talk about it. Like, I've used it, I think, once in my life, which, I mean, it says something. I think it's one of those services, if I remember right, where you can order flowers online, and they have different people that work with them, and then I guess they connect with them locally, and then they deliver the flowers. So pretty straightforward. Do I think that model ever goes away? Probably not. Probably not. So is this a pretty decent business, in my opinion, a smart business? Yeah. The idea of 1-800-Flowers.com is kind of strange, because like 1-800-Flowers would be like a harkening back to people probably using landlines more often than not, who were, you would dial a 1-800 number. The only other times I dial a 1-800 number is like when I'm calling insurance or something, 188 or something like that, in the U.S. And they're different in other countries, but they're basically like servicing numbers. So usually it's like businesses, they have a 1-800 number, and it could be like 1886 or 1885 or something like that. It doesn't have to be 800, but if you don't know what that is, that's what that is. And then the .com, of course, being the online services they provide. So yeah, when was the best time to buy this? Well, probably here where you had some pretty huge macro divergence. You can see right there. This was obviously really low at 90 cents. And then it recovers. It goes all the way up to 470. It refreshes itself back at 150. Eventually, it finds a support again by coming back above the previous all-time low. And this is actually pretty important. We're going to talk about this with Wolf in a little bit. That is a very important retest. So there's a couple things that happen back here that are very significant, and then that helps you to understand a little bit better what might be going on right now. I think it's really important, is what I'm trying to say, to recognize like where those levels were and when they took off, because you can see a really clear like beeline from here to here, right? And that to me is like, okay, something up here obviously is a resistance, but then this is really now a support, and it was acting as sort of a mixed bag of both, right? It was really having trouble kind of advancing here. So you had some kind of a creek, an oppressive motion right here, right? And then eventually it acts as a support. And now that it acts as a support, you can continue on. But before then, when was the first time this really was a support? Back here. Where's the second time it was a support? Right here. Now, I've got it a little bit high because if you look at the bottom of the mark, it's actually right there. And it never really hit this. You could say that perhaps it was right in this moment. That'd probably be the best thing. It's like, well, it jumped right there, right? And then it advanced. And this is really just a back test of the creek, not a back test of the support, which I would agree with. But in general, that's still the range that it was in. So there's a consolidation that happened, a long consolidation. This is multi-year. This goes from 2009 to 2012. That's a very long time. And this is actually pretty classic, I think, Wyckoffean move right here. You can see there's a two strength tests and supports, and then there's a dip. And then this is a very long backup, right? So there's a creek jump, and then there's a really long backup above the creek that ultimately should be coming back to retest support. Now, I don't see it going down very low, which is kind of interesting. Doesn't ever come all the way back down, But then you can see like the remaining is just like a general like M cross right here, like a double cross. And then it goes into an SOS, and you can kind of redraw it as a flag, and you can see that's like a perfect SOS off the top. So, you know, if we're looking at this long term, that would have been a great place to buy in. I know you would have had a long-term markup. You know, we're talking about, again, from that creek jump all the way to the top, that's like 1,000%, which is a huge move. So the reason that's important is because while it would be certainly not wrong to look at the bottom to the top of this move and suggest that, well, that this move is that long, it could be using these as fibs. I don't think it's inappropriate, and I've done this quite a bit. I don't believe it's inappropriate to use this. And in Elliott wave, there's a similar kind of function where you can measure from like a wave directional change, right? So using this or the spring, I think would also be appropriate. If you use the spring, which is this dip right here, which is the strength test back down, the liquidity test right there, which really eventually, you know, that's kind of the last time it makes a lower low, and then you can see it's just all higher lows until here, and there's a weakness. There's the chink in the armor, right there, where it dips down after making a high. It dips down. That's your sign of weakness on that trend. So now we've got kind of a layout of what seems to be most likely here the case. And so this is a 618 retracement right now. So we've got a 618 retracement, and it's going back to retest this region between, I don't know if you can see that very easily, but between where the SOS was and where the that last LPS was here in that range. So there's certainly a pretty simple way of understanding it, which is like, oh, hey, it's going back, it's doing a 618, so then it's good to go, right? Maybe. I don't know if you can ever look at something like a fib and say it's gonna hit this and bounce, because you know you could have looked at it back here and said, oh, it's gonna hit the 0.5 and bounce. Well, fibs are fibs. They give you decent probability that something is going to try to advance or at least have some kind of a reaction. In both cases, it seems like it dipped pretty low. And that does make me wonder if, again, you have like kind of multiple people using different targets, and really like this is probably what would be in view is like the ultimate low, and that's like the 0.5, and that's actually lower. And this comes back down to like whether or not you want to use certain fibs or whatever. I'm not going to worry about that as much once we get started. I just want to kind of be aware of where those are. So I just need to know, like, okay, we're kind of in that region where you might be hitting some. And then the other place that I would look is at 250, which is very low. And the question is, like, what would cause it to get there? I don't know. I'm on a weekly chart. Maybe they're missing a lot on earnings. Maybe there's some other problems going on. I'm not sure. But I do think that this first trend, building out from that, yeah, I still think you should build out from the spring or that last hit. I think that's probably going to be the best trend to use. That one was lost, and then the other one that we would want to look at is the cross, which is where did it jump, like, ultimately across here on the original downtrend. And I'm going to use the information that I have, not necessarily the peaks, because the peak here does lead you to a higher hit. I get that, but we're trying to be kind of conservative. So this one's kind of done, right? You would say like, well, that's done. It already hit it. This is a little bit more like, oh, it could kind of still make some room down, because while this was going through, again, another M here, this is the last resistance and support that was made right here. So I think there's a possibility that it could go down a little bit further. If it's an ABC correction, it may be finished, right? The only other thing that's possible here is that it's a 1, 2, 3, 4, 5, right? And a 1, 2, 3, 4, 5, then it just has to make a lower low. This could easily be it. It'd be done, and then it reacts back up. So this is a fairly classic example of like that shallow S-curve versus full S-curve deal that we talk about. So if this is a shallow S-curve, then what should happen is this is tried to advance. You can see it try to puncture the creek right there. It backed up. This would need to do a full advancement and go higher than the top. So in a shallow S-curve, this has potential to go from where it stands now at like 577 all the way past probably near 14. And there's a drop ledge right here. It may stay below that, but come between these two, which is probable. So that would show like an advancement, and that's what's required if it's going to advance again. Now from that point, this could come all the way back down. Like there's really no rule that says it can't, because a lot of times you're going to need that back test, and it makes sense. And you might be thinking, well, then it just looks like a big head and shoulder, right? Because it goes back to over here. Again, is that a possibility? Sure. I mean, it could be. But this is where you use discretion and you say, well, I'm not going to trade. This is your move going in. I'm not going to trade it. And this is a very long-term chart, so this could take a long time. This could be a February type move or March type move and then come all the way back down in 2026 to 2027. Really shouldn't be trading this like willy-nilly, like, oh, it's going to fly all the way up. But long term, then, does it have the potential to ever come back to its all-time highs? Sure. Again, the ledges that were dropped were never back tested. That's way up here at like $28. Do I think that's possible? Sure, I think it is possible. And I also think that they've probably already, to some extent, got this mapped out. Usually on the cat ears, we talk about this quite a bit. There's like a cat ear 1 and then a cat ear 2. And on the cat ear 2, you get a 1, 2, 3, 4. But the 1, 2, 3, 4 is a defining feature of a trend that's being broken and lost. Now you might say, well, why didn't you draw it down here? They clearly use that too, Booksy. Couldn't that be one that's utilized? Yes, it could be utilized at a later time. It's already pushed above that, as you can see. Right here, it's already tried to push it. The reason I'm using this one, though, is because ultimately I think this is more of like a weakness, weirdly enough, even though it never made like a second bottom before then. And then it establishes like a higher distribution. And that rejection to me speaks more of it just does. It's just, to me, it speaks more of the nature of like, where is it possibly going to go in the future? There was an attempt on the part of bulls right there, right, to kind of like hold a new trend. And this is also an attempt to hold a trend. So both are very valid. Sorry, it's a bit lower. But I think that this is your higher one, right? So again, this could signal for us at a later time, right? Like, where does this potentially go in the future? Maybe this doesn't come way back down. These are good brackets to use. And they just are. So when would it have to get up here if it uses this? What's the earliest it could get up here without breaking it? Let's say it doesn't want to advance right away. Our estimation would be about April 2026. That lines up with this idea that the market's going to have this like massive squeeze going into 2026. I got to be honest, part of me really does believe this is universal. We've seen it a lot. February, March, April, there's just a ton of like high targets, which is not, I don't think it could be chalked up to coincidence if everything in the market's kind of doing it. I do, however, worry that, and it's the big worry, that we're misreading what could be like a pivot. And I know that that's kind of insane because you're like, well, that's completely the opposite. That would screw over everyone, Booksy. Yeah, it would. Everybody that believes that's the right number. I got to go with my gut and say I don't think it's a pivot. I think it's ultimately it's a target that the market's trying to get back up to certain levels that it lost in the past few years. And that 2026, early 2026 is indeed like a pinnacle time for the market. And then 2026 to 2027 probably are not that great on the whole. It's more sideways back to where we were. I can't prove any of that, right? It's talking about the future. It's not something that is provable. But I mean, when you look at stuff like this and you start looking at that, I'm like doing it right now. I'm like, yeah, it makes the case for you that like that's probably ideal. Now it could navigate these a bunch of different ways. To the to the layman, this probably looks ridiculous. They're looking at my stuff like, well, this is crazy complicated. It's not that complicated. It's very simple. These are basically just bullish trajectories that during this downtrend, during this bottoming phase, you are trying to correct direction. And so you're indicating, like, probably algorithmically to some degree where you want to go in the future. And it does follow through. We know this objectively by looking at stocks that have done those moves and then seeing that those were built-in trajectories from early on. Now, which ones get hit and which ones don't get hit, that's a different question. But then in addition, you have very clear evidence of like support on a trend, right? And then that's picked up later. So the idea that these kind of like middle, I call them crosses, right? Because they're not necessarily creeks. You're basically defining like tangent markers of sorts, curvature markers of sorts, right? On like a creek. Directionally, that's where it's going. Now, where are they going to? Probably EMAs. I don't have anything on here that's an EMA. Well, my guess is if we added an EMA to this, these are going to interact somehow with that moving average. I like to use the 180. And that probably, again, comes from like just a computerized era of much the same. So there it is. So notice that the trend here is clearly following the moving average. This is just, self-fulfilling prophecy kind of stuff. Like, clearly if it's going to, follow something, it's going to follow something that everybody has access to, like an EMA or a trend line. But it's interesting to me that these trends that develop the crosses actually do a really good job of like bringing it back and then lining it up with where that moving average is, which is right there. I mean, it's plain as day. I could make it a little bit brighter so it's easier to see. Hopefully, there you go. You see that. So like, does this make sense? Sure. We found all that by using kind of basics of like, all right, here's where the supports resistance, here's what happened back here. So this is potentially like the beginning of a really big run. You have, a backup that's roughly coming back to the 618. We can see it took off from like 250s. We can see that like long term, if this were to continue to trend down, like let's say it didn't work out here, what would probably happen is that it would try but not make a new high, and then it would basically fail and capitulate. And that's your full S curve. And that's a situation where, again, you're going to come back and look and see like, all right, it fails right here at, $9.60. Well, that's halfway from top to bottom back down to these supports. It makes perfect sense. And long term, it would be down into 2029, back to like 250. That's a big retracement, probably like an 854 or 786, but it's certainly a valid one. It wouldn't kill the stock. It's just a retracement on that big move. And ultimately, like, we're looking at these things small and kind of small and like in terms of like short term, but look at the setup here, right? And check out that move and how it came higher right there than the previous top. That's really the same exact thing we're talking about here as well. I mean, it's fundamentally like no different. We're talking about, well, we want to see this. It's the same thing. And if it can come down and make a higher low after doing that, then there's no reason why, just like here, you've got the compression, but there's no reason why it shouldn't then just advance. This is a very classic bullish example. Likewise, if you go down, then it does bring into question like, well, what happens later with this thing? I don't know. If this were to continue down from an iteration standpoint, I would probably suggest that this is then going to be like a new cattier, because it did it here. It's possible it's not going to do it. It's going to do it again. And you'd be looking at like a trend here to here, like down this way and then down this way. So you'd have a big reaction back up to like $10 and then sort of list back down and make a decision if you're going to come low again. You know what I mean? Like a way of walking it back down towards previous levels. So I look at these things and I see something like this trend, and I see then how this then interacts with the future, right? And what happens here in the future with this. If it fails to make advancements here, then ultimately it leads into potential setups later. And all of that comes from this one little line. So in recent days, I was critiqued once again about the unnecessary nature of my line work. And I'm like, look, man, I get it if you just look at the chart and you don't know what I'm looking for. But if you know what I'm looking for, then this makes perfect sense. Like, this is exactly where that's going to be if you know what to look for. So it's like, I don't worry about it as much as some do. And I think at the end of the day, like, I just really need this information. These are kind of the basics for me. And that cross right there and that cross right there are essentially identical. Yeah, I mean, like you can see, I basically did it the same way. Timing is always a tricky thing in the market. I don't like to try to do timing too much because it's very easy to be wrong. It's also a situation of like confidence where you're wrong enough that you're kind of like, all right, I got to be skeptical of my own stuff, but I can't be so skeptical that I can't function. You know, I have to be able to try and say, like, this is when I think it's going to happen. Otherwise, I don't have a timeline. And that's a tough place to be in the market, you know. It's easy with shares if you believe in something to just buy it and hold it. It's a little harder when you're trying to swing trade. You really have to have an idea of how long you're going to be sitting on that position and what you're going to be doing with it. I mean, you could be illiquid for years if you buy something and it doesn't move, like AMC, for example. A lot of people bought that 3 or 4 years ago, and it's not at a place where you're ready to get rid of it yet when it's down at all-time lows. So timing is just tough. You know, I can't really promise anything. But I do think that on the whole, this is probably as simple as it's going to get. Like, you've got a jump here. I would even say that this guy, to me, is like pretty classic M-cross material right there. There's a middle. It's back to the middle right now. It's at a place where it hasn't yet made a new high. All that's happened is this pop. It's a big reaction. That's fine. If it makes another advancement and it only goes to like 960 and then it fails and comes back beneath this trend, I'm going to have to just suggest that at least until it reverses, or unless it reverses is probably the better way to put it, I don't think you can really look for any kind of a bullish outcome there. I think that the sideways here is really discouraging because this would take 2 years or something. It's just a long form stock. That's just the way it is. But I don't see any like really obvious negative signs except for this one. So just like back here, you had this SOW. This points, again, towards literally right where the bottom is going to be in the future. You see, if that had kept going, it would have been worse off. Now, this doesn't go that low, which is great, but it does certainly add to the speculation here of like, well, look at where that is. You know, this is 2028 April. If you're trying to just walk this down over time, this is a secondary distribution that gets you the second half. It's very clean, very simple, and I think you get a really easy result. And yes, they do flip-flop. They look quite the opposite, don't they? You know, in the end. I'm not, again, going to sit here and like justify why that is, but I know that anytime there's I can say it blanketly is what I'm saying. I'm not going to explain it all. Anytime there's like this kind of a setup, you almost always have like that split decision at the end. And it usually ends up being like perfectly halfway. So it usually ends up being the situation where like right where that's supposed to be supposedly happening, that middle, there's like 2 different directions at play. Well, then how do you know? Well, you know if this makes a higher high. It's that simple. And you know if it doesn't make a higher high. You know if it jumps this creek and holds it versus being oppressed beneath it. And there are combinations therein, you know. But certainly, like, this is pretty obvious. These are really all you need. These 2 on the bottom, this one's irrelevant now. I don't really think it's relevant anymore. This one's still relevant. I think it does talk about probable potential to come back. And it goes, it's funny enough, because then it's like full circle. Why would you come back to 250? Why indeed? Remember when we were doing this like 5 minutes ago and we were saying like, hey, that's kind of weird. It didn't actually come back and hit that bottom. It didn't actually retest the bottom. And you guys are like, well, that's not that important. Not in that moment, no. But when the market is searching for liquidity and it's searching for levels, this is a given. if you never really went back and hit that level and checked it, it's kind of like we're now back in this channel. So it's like a very simple idea of, you could think about it that way too, is like it just rejected here. So if it comes through and ends up dropping through this zone, you're going to head right back down. Very simple understanding of, again, cat ear structure and like cross down structure. But this time just using like 3 major levels of support. And again, it wasn't actually ever tested. So it's interesting to see that come full circle if it happens, right? So what's a safe play here? I would say that, and Wolf Speed's kind of like this too, and we'll look at that in a minute. I would say that when you have a big pop like this, go back to the big picture and just see if there's a lot of room. There's plenty of room here to move, but I'm curious about stuff like RSI always. Like, did this actually breach the top? No, not quite. It may have pushed the resistance a little bit. There's also like a widening here, and it never actually got oversold. So that makes me think, well, if there was a rug pull, it's certainly possible this comes back down before going up again, right? Before like actually breaking out. So no matter what happens, is like downside is certainly possible here. I could see that playing into it because it never got oversold on the weekly. And the widening is great, but it didn't ultimately break out just yet. You know, it pushed it a little bit, which is fine. Does it have to do that? Well, no. I mean, 3 hits, you could take off after that. It's got 1, 2, 3 on the bottom here. And then looking at that with where we are, I could look at this and say, well, that actually leads me pretty quickly to interpret this as a widening as well. Even though it's a bit more of a curvature, I do see a widening spread here now that I see it on the RSI. And it looks like it started at $11. And it's, again, a little bit wonky because it doesn't ultimately go straight. It looks like a bit of a curve down. But yeah, there's a widening spread there, and it just widened again. So it's like the same idea, you know. You could certainly have a drop through or a drop low, and it did that, by the way. It already came back down to like 540, so we'll see. I don't even know if it needs to go lower. If I had to pick another number, I'd probably pick 5 even. If I have to pick like 1, like right there. See that? And that's debatable because it looks like it could have hit there and like found support. But if I have to pick like 1 more, that's probably the one I'd pick, is 5. And then I would just look at other stuff like, did it break this trend? No, not really. Kind of dipped beneath it. So it dipped beneath it a couple times. If it does a distribution, maybe it comes back. This could be the August move playing into September, right? And then October. So you certainly could have a September, October that are quite low that come back and retest these places if it doesn't find support right now. If it does find support right now and keep the support right now and not lose it again, I don't know why you do all that. I think September, October would be, again, more or less like, hey, we're going to come up and then drop again. And that might be what we see going into the end of August. I'm wondering. I'm not going off the weekly here. I'm just looking at the weekly. Is that you might still see this try to advance one more time. There's another trend, remember, that we were messing with, and that's this trajectory. So this would be another natural place to potentially see a second top, maybe going into August or slightly thereafter. So from where we stand, 590 all the way up to maybe 690, I think is pretty safe. That could potentially happen in August. And then after that, probably going to go ahead and break this trend and do what's called a strength test down and drop through here and just see if it's going to drop. And then if it holds, maybe it holds at like 5 going into September, October, then I think you've got a really good case for a buy-in, like a huge buy-in. And then you basically have a big rally, probably like November, going in towards the end of the year, maybe into February. Then I'm looking at this as like a question of, does it hit here or does it hit here kind of thing? You know, like how far does it go? And I think the safe bet is going to be just a very simple advancement from like 5 up to 9. which is a big move. But I think 5 to 9 is probably going to be the best, safest move. So again, if I have to pick one, I'm probably going to, at least at this point, I'm going to say probably 9 because I think it's long term maybe going back down. But I do think that that's a safe enough bet. And then it's going to check that weekly 180 when it hits that. And it may, who knows, it may not even go this high. It could get stuck beneath like 860. So if you really want to be safe, just look at the second top that was made, 850. Well, what if it just goes? Whatever, then just trade it. Just trade it. I'm just thinking as objectively as I can. I'm thinking that maybe 650 up to 750, but if it does have like a rebound here, but I think after that it's going to come back down into the fall, the autumn time period. So hopefully that gives you some idea and thoughts on flowers. Yeah. What's up, Riot? Yeah, you might be right, Luke. I don't know. I don't know a lot of those stats. Unity was another one that folks wanted to look at, so I'll take a look at Unity. I've charted this before, so I don't know if it'll pull up on here. I'm not sure. This is volume down here. It's really light on this chart for some reason, but I guess that moving average helps. Let's take a look. So was this IP in 2020? That's what it looks like. All right, so very quickly, this is the top, and then it came back down. It tried to rally again, and in the midst of that, there's this pretty nasty sell down that happens, and then it loses its support right here in a second nasty sell down. So this is going to be a really important region right here to consider because it's horizontally and diagonally significant. Like obviously there was some kind of support here that was lost, but then also there seems to be a trend this way. And I'm curious if we look really close. I'm curious if that was the case. So what I'm going to do if this initial trend was used, looks kind of low, but I'll try to do it. I have a little bit of a chip on my shoulder when it comes to using wicks because while I do feel that they're used, I'm not sure they always represent the best. In this case, this looks pretty convincing. Like it looks like it did a pretty good job. So that trend is actually very solid. Again, I'm going to mark off this level and I'm going to keep it more precise because I think you can see where it dropped off right there at $92 or thereabouts. I think that's really significant. I think that's going to define a lot of this. So I'm actually going to try to use that. And it looks like 92.87. So I think that's going to define a lot of the potential in the future for this. So we have a 1, 2, 3, and then a 1. I don't even know if I want to count for this one. Yeah, 1, 2, 3. Well, 1, 2, 3, 4, 5. So 1, 2, 3 has already happened again. So if it's going to be bullish, it needs to keep going. It's already peaking, which is not ideal. And this is a weekly chart, so you can see that like this is very symmetrical, oddly. And it's weird that the markers are kind of the same. We're just counting. That's like a 1, 2, 3, which is more commonly like a corrective measure. I'm not so sure about this one, that I'm getting this one right. I think I am, but who knows? That looks right to me. It's kind of ugly. Nah, whatever. Anyways, it's more about this. Anywho, this is kind of concerning. that this did advance was fine, and then it comes back and advances again. It's meeting up now at that weekly moving average, which is coming right around the top. So that looks kind of pre-planned right here. And there's a little ledge and a little resistance that's formed early on at like $41. I don't want to say that this is done, but I mean, that's a 150% move. If we use, let's just say we used like a trend here, you're probably going to find, yeah, and I didn't even really even need to guess very much about it. Isn't that fascinating, right? This was like a creek that was crossed, but it doesn't use the peaks, right? It doesn't use this up thrust. I always find that to be kind of a confusing element when doing trends and creeks, because it's like I really want to use that and use that uptrend, but realistically, like that's not at play. What's really at play are these crosses. And look at that, right where that intersection is where it loses both. You can see the drop down. So we were right. That 92 area is extremely significant. And then this uptrend probably is significant as well. This was the trajectory that was used in deciding direction, right? Early on. It was they tried to hold on to that. My guess is that they're going to try to do this again, bulls, and you can see it right there. This is, ignore the noise, right? There's a support there, and then look at the rest of this. It's trying really hard to hold this, and then when it finally rejects here, it just dies. And like that's the motion that, the same kind of motion you saw in some ways here, is trying to like hold a trend, and then it fails. So this certainly is also very important. So we've got like kind of two competing trends. And again, there it is on the bottom. Like everything we need for this stock is like right here in the top. And then I'm looking at this like I don't really feel very good about this being a huge move. I think if you make an advancement, like let's say RSI pumps up high and it goes to near all-time high for RSI. Previously that was up here at like 81 or something. It could definitely do that and has room to do that and have that real big move. This had a backup similarly right here and then runs up pretty far. So we could definitely assume that that's a possibility. And maybe again, we're talking about an August move here that's like really readily happening. So we've got like a local trend. It's hard to look at this and say it couldn't make another low because there's a lot of space. So it's either going parabolic where it's essentially making a higher high on this trajectory. So it's now making a higher trajectory like this, or it hasn't actually found the bottom yet and it may come all the way down to like $30 and then it might go, you know, as a correction. That might make more sense to kind of go ahead and get that final sell down right here. My guess is if in the future it's going to dip, if it's going to drop beneath it, my guess is that there would probably be some early indication, but I don't know if it would be here or after. So I'm going to make it look like it kind of goes beneath it right there, because usually you have some early indication of like a dip, especially on this moving average, where like this would come through here, and then the next time it goes through, it's going to drop and it loses it. And even in the midst of this, you could be making higher highs, you know, during this whole time. That's not impossible. But if the market is correcting already, then it's kind of building in that noise. In that noise, there's a build-in of, yeah. So if we're doing like, again, a similar kind of setup where August is pretty big, you could have something like this, a big pump in August, and then September, October, and then even into November could be kind of a slump period. And then building back out going into January, or, you know, we might finally get some consolidation here, and then who knows? This is a little ways off. Maybe it doesn't actually lose it till way over here somewhere. That you'd probably have like multiple SOWs if it's going to do that. Now, why do I think that's likely? Again, we're at like a top on a trend. And I mean, if it jumps it, it's pretty strong. There's certainly a possibility if this jumps, it's going to at least go back up to 41. There's this also possibility here that we see something similar to the last move, which we can kind of take with a grain of salt and say, well, last time it did a backup like that and it ran this far, and that's about 80%. That would take you up to like $52, which is still pretty high. And then we could just consider, like, would that be reasonable? Like, why would it go up there? Well, it's testing that weekly. Do I think that's reasonable? Sure. There's a double top here that actually looks like that's like kind of the middle zone of it. I'm not even really looking that close, but you can see like that's pretty close to these 2 points, the center of them. So on average, it looks like the top of this range, perhaps. I still think this is a better resistance, the 41. It's got way more hits on it, but these two do warrant some investigation. And then the other thing I would do is probably look at this and say, on the whole, does that backup make sense where it is? And it should. And it looks like it does. It looks like it does make sense. And it actually has quite a bit going on right here, because it looks to me like that could even come below. I know everything's kind of pivoting on that middle, which is a bit odd. But it does look like this could even drop significantly lower if it really needs to hit that. So earnings, I'm not saying it's definitely dropping on earnings. I think that's a bit silly or a bit presumptuous. You can see some of these other earnings were pretty massive weeks. This has a really big drop and then runs right after. This is kind of what I would imagine, I guess. Something like that. Like a really huge drop and then it hits like $26 and then it just takes off. So what's the best trade? Probably to wait. I haven't had any luck trading earnings this season, so I'm not feeling it. I'm not clicking with it. I couldn't tell you, that this is definitely going up or definitely going down. I would suggest to you that if this drops, this seems like a pretty reasonable estimation of that. And I'm not saying it's definitely happening. It's Wednesday. This is tomorrow. So this would turn very red if that happens. But I wouldn't be surprised if by Monday it was down at like 26. And I actually think if that's the case, it's a pretty good opportunity. It's probably the best opportunity you get. If this thing comes back towards 26 by, and I might make it a little higher on my notification, like put it at like 28 or something. Well, let's see. Let's zoom in a little bit. Let's see where that really is. Because I'm looking at the previous top, not just that angle. The angle is important, but the previous top is probably a better indicator of like alert. That's like 28.50. If it hits like 28.5, I mean, that could be a really great buy-in. Especially if it beats on earnings. If it beats on earnings and then hits 28.5, it goes the opposite way. I'm going to see that as a corrective measure. I'm not going to be particularly bearish on it just because. And then I'd be looking at potentially an August run-up that goes from like 28.5 all the way to potentially, up to like near 50 something, 52. It's a 90% gain. It's a big move. So there's certainly and that's a pretty good one too. You can see the previous top. If you go back to, I love the 50-50s. If you go back and do a 50-50 from our target range up here, we were saying that was a pretty comparable move, around 52.97. Use that as a 50%. Where does it land you? 28.55. That's pretty fascinating, right? Yeah, I mean, it is. It's probably also a fib back up here of near halfway, and it is. The halfway point is at 29.3. So it might even be better just to kind of put this up higher, like 29.5, and just say, really, that dollar value right here is a great zone. If it backs up, that's a 50% retrace, and it develops a really simple cross-up, 1, 2. I mean, this can never be perfect, but it's definitely like, this is really, really clear and clean, like a simple setup as they can get if it happens to hit the right boxes, right? Check the right boxes on the way out, way down, way back up. That's only one scenario, So I'm not giving like every scenario under the sun here. There's plenty of other scenarios. But that to me would be a potentially very good trade. Just like that. And I think you'd have a very good chance of making some pretty decent money on that if it drops low. So I'm gonna keep that one on the chart. And then big picture, we know like what that would mean, right? Is like, again, this being if this is a shallow S curve and this is a support and it does pop quite high, we can come back and look and see, did it extend above either of these two tops? And it would have, right? And I actually think in this case, it'd probably be fine if it didn't go beyond 58. I think you can make an argument because remember the wave here, this is its own wave, this little section. Remember that? This one actually doesn't make that high of a high. It only goes up to like 49 and then it starts building out. So if it goes above 49 and it hits 52, I think then it's potentially very bullish. And then you can wait and see what happens going into January, with a backup phase, probably. That makes sense to me, because then if it backs up pretty far, this is basically like a 1, 2, 3, 4, 5. Then you've got a really simple Fibonacci extension. Let's see what that extension is. Let's double check it. All right, I'm just eyeballing it. The fib extension of the 168 is 56. Is that pretty darn close to what we were thinking? And then the 1414 is 47. Is that in the range that we were imagining it should be in? Yes. Like, that's what fibs are good for, in my opinion. I love seeing them back it up. Like, yeah, there's evidence that happens. Whoa, you could have just done that in the beginning. Yeah, but then I wouldn't have had to think critically about it. And I wouldn't have learned what might be going on beneath all that stuff, which to me is important. Like, I find that to be really significant, So it could be that, improbable anyways, that this is what's in view, is testing this kind of main trend right here. And then the 5 is a different beast. I always just do the generic 5. It does largely depend on the probabilities for Elliott wave depend a lot on previous waves. So if the wave 1 does this kind of a retrace, then 3 is more likely to do this one. And if 4 does this kind, if 3 does this kind of a retrace to 4, then it's more likely to do this one. But one thing you could say is that typically if it doesn't go below wave 1, which is what I've got here, wave 1 being down to 30.98, and with this backup, that could change things. We'll see how it goes, And by the way, if you're really not sure about earnings, you just want to like average in, like there's nothing particularly dangerous unless you're worried about losing like, a few bucks on that move. But I would suggest to you that either way, the riskiness of it doesn't really go away up or down in earnings. So you just kind of, if you're playing earnings, you're playing with fire. Like that's all there is to it. But I would say that, yeah, sure. If the backup here were to come back down and stayed above 1, which is fine, then I think that you'd be in good shape to hit $40 potentially, on the next wave. And that makes sense going into February. There it is again. There's February right there. It's lined up pretty neatly with that intersection and then the correlating extension on the Elliott wave. So that could be the plan. And honestly, is that a better trade? Yeah. I mean, if you want to wait until December and see if it's down here at 30 again, is that a better trade? Well, the answer is yeah, it probably is. Well, what if it doesn't run? Oh, well, like, I don't know. I don't know what to tell you. I can't predict that it won't or will or won't. I can just tell you like where the numbers are, and they look pretty good. So all of this looks solid to me. I think this is a really good setup. I was saying on the big picture, I'm not so sure because it needs to make this jump in order to, just like I was saying, this is a trend. So it needs to make this jump in order to be bullish. That's what I was alluding to. And that if it has like weakness going into, let's say, March, you may see like multiple, like upthrust kind of moments here, especially if this breaks down. Actually, that does look quite right, because usually you'd have like a weakness and then you'd have like one more pump on the other side of it. So I'm going to throw a guess out there that this ends up becoming bearish divergent going into February. That's a pretty steep guess, right? Why would it do that? How can you possibly know that? Well, it's a gut instinct, I guess. That's not really TA, but the idea of this hitting a top and just continually riding the top doesn't really make sense here. I think what you want to see is you want to see that longer term divergence play out, and then when it comes back down, and again, longer term, having kind of a crappy 2026, I think that would be a great time to really prove its merit on strength. Like if this comes back down, then here on the RSI and here on the big picture, I think you've got a really bigger, like a bigger picture kind of analysis where this is now made like a higher high, and now all you got to do is come back and do strength test. And usually this is what's in view, is this previous bottom from over here, which again makes sense. Like this all lines up very neatly. And that's a really good one, I think. And there could be worse. This would be a very bullish outlook still, like this. I mean, that looks pretty solid. And that gives you the potential that after 2026, you have maybe a bullish election or whatever like happens there in the midterm. Then you could start sort of rallying back again. And who knows? I don't know what that does, but if this is bullish, then it should be, again, like another 50-50 kind of setup. This might be like a massive, massive rally back towards all-time highs if that were to occur. It's entirely possible. It seems a little ridiculous, but for other reasons. But I mean, I'm just thinking about unity. I'm not really sure. I know what it is. This would have to be some kind of like long-term buy up, like going into 2028 or something. That makes sense. Like 2 years. It's not like an overnight thing. This is just a long-term rally. I would believe this before I believe that it just shoots straight up. Yeah, that would make sense to me. Finally come back up here, strength, sign of strength right there, retest. This guy, we were talking about this being really important right here. So that's like a push into that area. Really this one. Oh, that totally lines up. That's really neat. Yeah, so that looks really good. It doesn't have to do this, but I mean, if I'm gonna pretend to kind of understand the market and like have you guys like pretend and kind of see where the waves would be going, this is probably the best I could do. I do think some of these are built-in trajectories, like they're already there. I don't need to guess. These are there for sure. These are there for sure. And then longer term, there's other things that aren't quite there yet. Like this isn't here right now, but once it is here, you've got this hook. You know, it should point towards a potential slingshot moment. And then same thing, like this should eventually point towards the top as you see these trends build up. And that's why it makes sense. It doesn't mean that I'm right, not yet, because none of this has happened. But it would have to make sense in order for it to... So if I just drew it willy-nilly off to the side, but it doesn't interact with any of these already established trend markers, I'm not really a big fan of that. I'm just not. There's worse scenarios here, you know, where it doesn't come quite as high or it drops really, really far for other reasons. I'm not really looking for that perfect, you know. We could go on this all day. One of the things that you could use is like the trajectory up here to determine possible trajectory down. That's 66. So wave trajectories tend to be fairly even. They're not perfect. I think I did a pretty good job of guessing where that was going to be. That's 66 right there. So, and I'm really looking backwards at like where does it need to go back to anyways. It needs to come back down to here. So that lands on top of the trend. It lands on top of the level that needs to be hit. That's your big buy-in moment. Probably at the end of 2026. This is a very extreme example of like that bottoming motion. There's other possibilities. I'm not going to continue to stress the same thing, but it is very possible that I'm wrong. It doesn't ever come back there. You know, this might chop sideways here and then have like a dip and then go. It never really goes beneath. I'm looking at this level right here at 40. Like it could hold 40, for example, and trade from 40 up to the top at 55 and then dip and then never really go back down. And that's another possibility. So we're not there yet. And it would accomplish the same things. That's what's interesting is you still get that trend up. You know, we're not there yet. So I'm just looking at long term, like what would probably be the most likely. So I said I was going to go through. Yeah, I know. It has a gap to fill at 29.69. Well, there you go. So you didn't need me. My 29.55 was maybe a bit too low then, if it just fills the gap. So let's do, we'll do 29 like 80. I'm not sure it will fill the gap, but I'm feeling pretty good about that one. I think that one's fairly solid. Both of those were pretty good charts. I like them both. They both look good. All right, we've kind of run through the gambit here. I don't really want to do AMC again today. Might clean this up a little bit, but we've sort of already addressed all of the potential concerns. I did a little bit more in terms of scenario on something like AMC than I did on what I just did on Unity. But on the whole, I'm always looking for like certain indications. Like this right here to me is a really important one. And I think this is going to be very significant. And this is a really important one, the green. This cross matters a lot to this stock. If you look at the gaps and you look at the values on these moves, this particular cross right here is so significant. We saw something similar to that previously when we looked at AMC's trajectory targets for the upside not that long ago. Why is it moving that stuff around? I don't know. Oh, because that thing. We did something similar right here. I don't know if you recall. And it helped us to understand like potential trajectory targets, you know, in the future. So like when you look at this kind of thing, they're not all equal. They're not all going to be super relevant. But I do think this is a similar situation right here where you've got this kind of build out trend and then it hooks beneath it. And later you come back to test it and you see that same thing happening over and over again. So anytime there's like a cross down like that and there's this kind of rotation, if you will, around a value, I think it's fairly important. I think you should at least take note of it. This very much so didn't tell you where the top was, but it absolutely told you where this was probably going to be resting like, it's so simple that it almost kind of hurts, right? You're like, well, you could have just done that and had an idea of where this might go, you know, and that's true. That's totally true. Is this a inverted head and shoulder then? It's possible. It is. I think that the nature of an inverted head and shoulder for AMC has been kind of strange. If you go back and you look at the kind of the early days of the run and you look at that run up as an inverted head and shoulder, you can make an argument for the 2020 run that that's what it is. But I don't find that to be the most compelling argument because it's pretty sloppy as an inverted head and shoulder. The motion itself, if you think about it as like multiple strength tests that are changing direction, I guess you could think about it that way. And that, yeah, it's trying again, it's stronger, then it tries and finally breaks. But, you know, does that mean that it can't do a spring right here and have like some irregularity to it? that's where you start running into some issues, I think, where people will say like, it's got to do this or it's got to do that. I'm like, These head and shoulders that form on things like AMC tend to be kind of not willy-nilly, but I wouldn't call them very strong, most of the time. So I'm a little bit so-so on that. So if you're seeing that on the chart at any point, that's not what I'm trying to get at. But yeah, these two crosses are really important. This is kind of your M cross, your wave down the middle. Getting above this guy right here and making an effort to get above like 5 right there and go back and fill that gap. That's where it needs to hold in order for that cross, and you can see that cross as I just did with the dotted lines, that cross to be effective. It's also like a long-term trend, so it would be a breakout. And I do think that that's a big part of this. I'm not sure what else to say about that, except that this probably is indeed like the middle of the wave kind of thing. And you would see that then as a continuation to the next, which we've already addressed several times. And we've talked about it as highly probable that this is going to be going up towards a couple different places. One is $8, the 7 to 8 range, and the other is about 12. Now, those are pretty different, but that's where I've got the markers, and it really just depends on what the operator wants to do and how much buy-in they get. I mean, if there's a squeeze, you got to have shorts. More shorts, the merrier. So those are numbers that I'm not currently tracking, and I'm not going to try to track them. But those are things that I'd be looking at and considering when I'm thinking, does it go to 7 or does it go to 10 or 11? You know what I mean? I would just say that, like, for now, the spring is probably going to give us a stronger case for a higher move. You can see that if you hit a spring and the 50% is around 475, 485, you're likely going to go to $10, and that makes sense. That's the dominant creek area up at the top. It's right where it needs to be. 10 to 12 bucks right there certainly makes sense. That's the long-term, like, most important creek. It puts it kind of in the middle here, so it's not quite the top, not quite the bottom. It's really like the center of this range, if you will. If you got if you're drawing maybe a trend, that's the best way to do it right there. So perhaps this guy, on top of this one, that was made by this hook. Tesla popping a little bit. Got an alert. We'll have to go check on it. I think it's jumping a creek. So these are things that, like, I'm watching, but I'm not, like, really concerned about at this point. I know where this region is. I know what I'm looking for. I think that you have a better case, in my opinion. You have a little bit of a stronger case for upside if you get the spring, because I think that's a macro spring. And if it doesn't, and it just pops to like 10, I'm not going to be disappointed, but I will be more cautious about potential downside. I think there's a struggle there to kind of see that as not distribution. If it doesn't make a higher high, it's a difficult one, because then I'm like, well, is it going to come all the way back down to $2 now? And is it going to come back down and make a low? That would be a constant question, unfortunately, if that were to occur, which is not what ideal, right? It's not what I want. I don't like to have those questions. So right now, I'm really just kind of focused my best on not keeping it simple per se, but just, that's not really the right way to put it, but doing my best to just make sure that, like, I'm watching these levels as carefully as I can and really just paying attention to what happens after earnings. I've already warned people. I'll warn you again. I think it's worth repeating pretty much every day this week. I'm going to be very cautious if this thing pops to like 380, 390 at earnings. If it pops really high, comes above even like 360, I think there's a danger in seeing an advancement too quickly here. Some people are going to ignore that because they're like, well, I don't really care. It's just, bottoming function here, and then it's going to rise and keep going. It's not impossible, but what you'd have to see is that it builds support. Ultimately, you'd have to see that it builds support right here at 350. And that's what I was saying. Like, if it pops to 370, you have to keep support at 350 area. It is non-negotiable. Like, you can't just dip a little bit or something like, oh, it's just a little willy-nilly thing. Like it needs to hold that support and bounce and go. So you really have to pay attention to what we're going to say as distribution here. Because if it distributes, the rug pull into mid-August to late August would be very hard to deal with. It looks kind of silly because it almost looks like the same thing we already did. And you're probably thinking like, well, why would you do that? Because in a distribution, you often will punch the top and then drive back through. And the reversal of that action leads you down low. So like the up thrust here leads you to the spring in that double flush kind of scenario. I'm not saying, again, it can't possibly jump and then hold support and go. That's not impossible. It's not. But it's a dangerous gambit. Let's just put it that way. It's like AMC's propensity to kind of screw you up in that regard is very, very high. Like it tends to be a very difficult one to judge. I can actually see that marker right there. Yeah. That's the marker you got to be careful of right there. Yeah, so just be mindful of that. Like it's a danger zone. You know, the immediate gratification of like a pop in your call options might make you think that it's definitely going to go, but I've warned people about that kind of stuff before, and I mean, unfortunately, it happens. It was like when we were up here, you know, and I was like, yeah, this is probably going to go up, but be really careful when it gets to the top, because if it doesn't go the way you want it to go, and we at the time had some folks in here who were extremely bullish, who just did not believe that that was a problem, or were just kind of so inundated with that bullishness that they just didn't want to, and some of you guys know who I'm talking about, specifically. They were like, completely unprepared, because it's just like, well, look, man, you don't know what's going to happen. And you get into these cross zones and like you assume that it's going to go, you could be holding the bag, you know, and really what this is a push above the top. And it was even an extra distribution in there, which was really confusing. So it made a dip and then it did something that looked like a spring here. And you're like, it's going to go. And it's like, man, that was a rough time. And it's just really just a widening distribution. And I think that kind of stuff really throws us off of the trail, and we think that it's ready to go, and it's really not. And in this case, I'm not saying it's going to go into some year-long distribution either. I don't think that, or a markdown. I think it's very likely going to pop, and if it needs to do that last sell down, that's where it's going to happen. The easier solution here, the easier, I guess you should say path is probably a better word. The easier path is really just a path of a bullish move to the upside that stops around 317 and then consolidates and possibly has another upthrust. But really, I wouldn't be so worried about it if it distributed here. I think that's a little easier. I think it'd be easy enough to judge. Plus, you're not risking a bunch of money. If it jumps 316 then and holds and then advances, it's easy to see. You know, that's not that complicated. Whereas this is very difficult because it's like, man, holy cow, like it just popped like 20%, 30% or whatever. This is a much more reasonable and simple to understand hook, essentially, is what I'm trying to say. So I would look at this with nothing but just like, okay, like let's just deal with it and see how it goes. And then I talked about it yesterday that if for whatever reason, I wouldn't be surprised if it's like hooking into that day right there, going into like Friday, the 8th, and like kind of just leaving that window open, or maybe I should say into Monday, but just leaving that window open would not surprise me this weekend. That seems like a really good place to have a cliffhanger right here, right around $3. It's pretty much guaranteed this week. I'd be really surprised if it did something different, because it's typical for the operators and the option sellers to kind of keep it in a bad pin situation. But so it'd be similar to this build out or this one, you know, we'll see. So I would love to see this kind of movement up that doesn't actually result in a breakout, but then drops going into August and just gets it done with. long term, it's better for us, I think, to go ahead and get that dip. It really is. It's a lot simpler. Um, and I genuinely think that AMC probably needs the liquidity dip and that it would do us well to get it. So I'm watching for that. And then the build out would be very, very potentially explosive. I was going to say that we look a little bit at, I'm not going to look at Tesla very much. I just want to see what's going on. Maybe. You can see it's trying. This is the 1 hour. This is trying to make this advancement. And there's a buy signal here because of the cross and the RSI looking pretty good. I'm not convinced just yet because it hasn't actually jumped the creek. And the creek was actually pushed this morning. So unless this jumps above and then holds that support, it needs to like pop to like 313 and then hold support here at like 310. That's Wednesday, which was about the timing we thought might see it settling. Unless it does that, I think this is still on the table. I think it could easily sweep back down and just keep going down. So I don't feel like it's quite there yet. It's very close. So Tesla bulls need to step in or it's going to be a tough one, I think. So Wolf Speed. Some of you guys remember Wolf Speed, some of you don't. The long story short is this is a company that used to sell different products, then they decided to be a chip maker only. When they decided to do that, the thing went into like a massive dump. Now, this chart at first glance looks a little crazy, but it's not unlike what we did previously. Like we were looking at where were the major trends, what was trying to be like kind of gathered, what was lost. This is a weekly chart. So what's significant here is that if you look at the weekly and you see where this is going, I'm sure, you can see that consolidation here and then here again. It's the same consolidation that's happened a few different times. They're changing slightly, and it is narrowing as it goes down. It's a beak, as we call it, which is like a narrowing range. But it's basically doing this, where it's like you're getting that kind of cat ear formation, 1, 2 right there, and then it drops. And then you're getting a cat ear formation, 1, 2 right there, and then it drops. And you're getting a cat ear formation, 1, 2, and then it drops. But notice that this time, when it dropped, it didn't actually go all the way down. That's called a change of character. In my language, that just means that the behavior that's taking place is not consistent anymore. That's a good sign because if this were to jump above, you can see obviously that would be a breakout. Pretty straightforward. So it's been consistently, since it was announced that they were going to sell chips, probably around 2020. I don't know. If it was a little after then, I don't really care because this is clearly when this trend was developed. You can see this trend coming down long term right here. And that's the trend that's being used. This is the one when we thought if it held up here, it would make it back to like $12, and it didn't hold up, right? It went to a bankruptcy, like a Chapter 11 kind of thing. Now, if you look at their earnings, it's not been particularly great at times, but it's not exactly like taking on water either. It's kind of a little bit of both. The problem is their business model was undercut by a lot of other issues, and there is a lot that happened. I don't want to like kind of unpack every little thing. But a big part of it was the Trump election because he got rid of the CHIPS Act stuff, and the CHIPS Act stuff was what they were using to build facilities. So it threw a wrench into things. A bankruptcy, a Chapter 11 bankruptcy, does not mean that the company is doom and gloom. It just depends on what happens after. They've changed like I don't know if it was their CTO or their CFO. They've done a few changes here and there. What I'm really looking at is from a technical perspective, this has already changed character. In my opinion, I wouldn't even say it's an opinion, to be honest. Like, it could have a fake out move and still try to drop. But in my opinion, this has basically already changed character. And then if you look closely at the short term, you can see what I mean. Like it had a bottom here. It goes up. So it bottoms out at like 80 cents. Goes up to $1.80, drops all the way down to 38 cents, and then has this massive candle that comes all the way back up to 350. Now, some of you are going to say, well, then it's already done, right? But the thing is that if you look back at previous squeezes, and GME is a really great one, it basically looks exactly like this. There's an element of a bottom there, and then a potential for a spring. A spring would have like this massive amount of volume, potentially. Now, the spring is a tricky one because sometimes people say, well, the spring doesn't actually have that much volume. It's the sell down that has the volume. And then the spring buy up, usually it's not that big. It's kind of light. This case, I think the whole thing as a spring makes a lot of sense given what's going on with the company. Well, where does it go from there? I got to be honest. I tried to be as conservative as possible in this because I was like, well, there's a ton of different places it could go. One of the easiest things to look at is the original run-up from in 1995, which goes all the way to $8. Now, that's very similar to this first run-up that I have on the chart, but what's interesting is like this is where it should go because there's a sense in which this $8 or $9 mark, this is already kind of baked in to the trends. There's a V-shaped pattern here that I've got, but it's ultimately just a reflection of like the major sell down because I went and looked at where the big sell down happened, which began at $31. $31 is like the reset level. And then if you look at where the 50% is, the 50% is around like $4.50. It's pretty close to what we saw here with this push up where it goes to like 330. Now you're probably thinking, well, that's not 450. I know, but when you have an advancement later, if this were to drop back down and hit that mark at like 330 and then it built back out, it would hold support then at 450. And that's where it's like tested again. And there's actually already ledges right here. I don't know if I can like convince anybody that this is actually going to squeeze, but I would be very unsurprised. Let's just put it that way. If this has a big move, either now or in January, like one of the two, because I'm not really sure. If it happened now, then the January might be the second move, right? And that's complicated. I know it's not easy, but that to me is like, this is a huge potential move. If this squeezes, it could squeeze the shorts from back in July of last year. And what's even more fascinating, of course, being that this is essentially like a 1 year chart. If you look at where we were in August of last year, around the 22nd, this is similar to what we see in AMC. This was sitting around like $12. A really similar kind of a walk down without all the fanfare. I'm like genuinely thinking that this is probably what's in view is 12 to 30, 14 to $30, which is kind of crazy. I know it's really, really high, but I'm like, there's nothing else really there as long as you get above 4. If it gets above 4, there's a very reasonable explanation for why it then goes to 30 in terms of liquidity and all the rest. That's a 7,000% move, which is kind of insane. Like that's almost too much, right? You're probably thinking like, no way, not going to do that, Booksy. We'll put it another way, okay? Even if you didn't like this ideas that I throw out with like wave terminology and all that junk, even if you didn't like that, if you look at this as like a simple like 50% retracement, the 50% retracement goes to 757. It's the same area that I've got this like marked off and the same area that this downward trend was established, which is essentially like a rotation. So like I'm genuinely surprised because at the same time that I'm like frustrated because I was like earlier I was looking for those targets and we saw those targets. And now I'm looking at it like, there really is a strong case here that this moves potentially all the way up to like, again, just above like 760. And it may not go much higher than that. I'm not going to suggest it goes significantly higher than that. But 760 would be enough to kind of put it over the top of 633 and then build a reaccumulation, which could be quite volatile. Don't get me wrong. The only thing that's missing here that I can see that's just not there. I don't see it. I'm not sure if it needs to be there, but it's just not there. There is a gap down below at like 119. And that may be because this was a level that was established as a mild support. When you go back in time on the way down, but when you go back in time, you actually find that in the early days of the stock, when this came down, that was the defined range top, was like that 119. I went back and looked, and I was like, yeah, there's only two places that you would expect it to come back to retest. One is 119, where it finds support on the previous top, right? The other is down pretty low at like 70 cents. And there's not really any indication in the short term, like chart, that that should go to 70 cents. Like, I don't have much here. And you can see, like, visually, especially on the weekly, there's just a bar. Do I think it's potential that there's gaps in here that are around 70 cents? Yeah. So right now, what I'm thinking is that what makes the most sense is that this has a earnings, likely like an earnings moment, kind of like your AMC, and it's on the 26th of August. I'd be surprised if it ran before then, but what would make sense to me is that this drops into earnings and then rallies after earnings and either hits $1.20 or it drops really low to 73 cents. And that could happen after earnings. I mean, it could be like at earnings that dumps, right? I don't know. But either way, if it ends up at one of these two levels, I'm very, 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 very bullish on it. I think that this is a high probability squeeze candidate because of the short interest, but also because of the setup. It's got a lot of like little check boxes that haven't been checked. It's kind of that simple. And long term, there's a huge amount of potential, again, if it can get back above $4. So right now, if you're buying at 150, that's quite the premium. I mean, you're really getting a good deal. There's no guarantees in the market, you know, and most of the time, those kinds of results with 1,000 to 2,000% moves are just not typical. But you're talking about a significantly stronger move than like AMC set up right now. And I don't want to say it's like, again, AMC Part 2 or something, but the way this is established, there's just a huge amount of potential. Now, what would be the safest play would to not be try to trade short term at all, but to either trade just shares only or trade out towards past July of 2026, which is a year out. Now, that may not make a lot of sense to some people if they want a short-term play. Like, why would I wait that long? But the reward there is probably going to be pretty monumental if it does hit $30 by then, if you're willing to wait. That's the safe one. That basically is like a 3-month padding. And I do think that it's very likely going to get there by August, you know, essentially the same time we're in right now, 2026. I think like a lot of things, it really just depends on maybe the whole market conditions. Where's the lowest it could be by that time? Well, the lowest I would say is that $8 range. There's a chance that if this doesn't quite make a footing here, that this was the first squeeze, that it reaccumulates and it takes a long time and builds into a January move. There's no real guarantee it goes up again here. I've got it going up again here quite high. But it's certainly possible that it pumps to like 860 and then basically this is the distribution down here going into February. So what's the safest play? I'm going to say that if you're sort of shooting high, that you're going to look at 760 to 860 by roughly February 2026. So that's still a huge move from where it stands at the moment. That's not like I'm hitting the wrong key. That's not insignificant. So, and on the one hand, it's really stinky because of the way that what happened to this. It felt like it was done really wrong, and it didn't pan out before. But on the other hand, it's kind of developed into a much stronger play. And I've really spent some time with it this morning looking at it and looking at all the angles. We're talking about a 650% move. Again, not necessarily immediately, but by February, which isn't that far away. for what it's worth, this is pretty cheap. And a lot of people have trouble with stuff like Tesla because it's expensive and they can only afford to buy like short-term options contracts, which could get burned up pretty fast if you're not in the right place at the right time. This is not like that, right? This has a much lower entry. This has a lot of potential for upside. And the weekly just looks, frankly, it looks kind of perfect, you know? Again, my biggest concern right now, perhaps, would be this idea of like a fake out where it pumps from like on earnings, it pumps up high and goes to like $2 and then, or 225 or something, and then comes crashing back down. And it's entirely possible because you see that same kind of move on AMC in a distribution where it's starting to look really positive and then all of a sudden it just flips the script because it's really not going. It's more about where those operators are in that moment and what they want to do with it. Right now, this looks a lot like an inverted head and shoulders setup in the right way, in all the right ways. As you can see that motion right here, down and then up, and then it did go way high, but now we're kind of reacting here. So it definitely went way above it. All right, don't misread that. But then there's a potential here that this certainly could hold that support that we were talking about at like 120. That would be ideal. And then you just have to question what happens when it gets above 219 right here. This is a triangulation, as we call it, of an angle up and a sideways support. And once it happens to hit this area, you've got a big potential run up back to the $6 to $7 region. And I think that could all happen really fast, like a couple days, or at least within a week. And that's pretty much all I have to say about that for right now. You know, I don't have anything else to say about it at the moment. I think that the potential is absolutely there. I'm not going to overthink it too much more than that. This looks like really high. I wonder if that does point towards... That actually points higher than 30, which is kind of interesting. That next shoulder mark. I think this is the one I would want to be watching the most. But anyways, when you have a V-shaped recovery, which is not the most common thing in the market, but when you do have a V-shaped recovery, if you find these trajectory markers on the angles, usually they play a huge role in where the LPS is on the other side, the supports end up being. So don't ignore them, even though they're not necessarily your favorite thing. These end up being very significant in the long term if you find the right trends. And I'm not so sure about this top though. This is really far. It's like $60. This is like an AMC part 2. I mean, that's insane. That's like $60 if it goes all the way up there. By February. That'd be insane. Yeah, this really would be like a new AMC. I'm doubtful of that for a couple of reasons, and I don't really want to get too deep into it. I am doubtful of that because I just don't think that situation occurs that often, you know. It's just a very rare situation. And what happened with AMC and GME is pretty hard to replicate, but I do think this is very simple in some ways. I'm not going all in on it. I'm just telling you that, like, to me, this is probably one of the biggest plays of the season if it does this. This is a humongous play. I can't even imagine. It makes more sense to 30, but not to 60. That's double 30, which is kind of bonkers. But then again, like, that is the halfway point right here at 460, which is we're talking about. I get about 450. That is the halfway point from the bottom. It's not impossible. If I had to pick right now, I honestly think that Wolf is probably the easier trade. I think AMC is fine. I'd probably do both. But I mean, if I had to choose, the thing is about AMC is like we're looking at this move. It's a great move. I mean, like we've got potential at least up to 7 for if you're just conservatively looking at this. That's a 250% move. But I'm not seeing it go way beyond 360 at most during this move. And that's a big question mark. And then I'm really looking at November into December as kind of a crap period of like reaccumulation, you know. And then I'm thinking that it's not going to jump. I think it's going to jump off, I guess, 650 or thereabouts in the end. So when I look at it, I'm like, you know, long term, even if this potential is great, and it is great, there's nothing wrong with it. Long term, I'm really thinking this is the trade from 226 area all the way up to 1961. That's a 700% move. It's a big move, right? That's still a humongous move. And that's assuming a lot, that it gets to certain places and does certain things. But is it impossible? No. And I think it's actually quite reasonable that it gets there by about March, April 2026. We've talked about that quite a bit. If it takes longer, then I'm just wrong, you know. But I think it's very reasonable that it could get there by that time, believe it or not. So do I think that's a good play? Yeah. But I mean, if you're looking at comparable moves, this is way bigger. Way bigger, you know. I don't even know how to describe that, but you're talking about, and it almost, like I hate doing that kind of stuff. It's like so unrealistic because you've put that number in there. You're like, that's never going to happen. That is kind of what happened though on AMC and GME the first time. You know what I mean? It was like this ridiculous number that you're like, it's never going to get there. And then it got there and you're like, what the heck? How did that even happen, right? I'm just saying, like, conservatively, if this only went up to this top, that's 2,000%. That's conservatively. That's like, if this does well enough to kind of get out of this creek here, it's probably going to go to $8 or $7 to $8. That's still like from the bottom anyways, which we may not buy from the bottom at this point, but from the bottom, that's still like 2,000%. From where we stand right now, that's 500%. Now that's worse than the AMC trade. It is. But if it has like this max potential of like coming up to 30 to 60, that's way better than the AMC trade. Like by a huge margin. Huge margin. You know, if I have $100 and I put that in there right now, even if it drops, you know, a little bit, if it happens to hit 30, I mean, that's a 2,000% gain, right? So you're talking about a significant chunk of change, right? So you're multiplying it by 20. So you'd be 20 times 100 or whatever. I mean, it's just, that's huge. I can't guarantee that's going to happen. Nobody can. But that's something that I think is a risk reward. And knowing that, like, if I put $100 in this and it goes nowhere and I lose $100, am I going to be that upset about it? So, no, probably not. But if it gets up to 30, then I've made 20 grand or whatever ridiculous number that is. That's a huge amount, right? It's not insignificant, is what I'm trying to say. It's very significant. So, yeah. So, like, speaking of which, I would really lately been thinking a lot about what I want to do with the stream. We can keep it on for just a minute. Yeah, it's trying to move. I've been thinking a lot about what I want to do with the stream moving forward. And this is where the talk gets kind of maybe boring for some, not interested. But if you're interested in knowing kind of what's going on, I'm not sure, like basically the beginning of the year or thereabouts, I had a part-time gig, right? And I was working that job. I stopped working that job and I moved on and we started doing more streaming more often. And I had taken a break before then, and the stream had kind of like lost a lot of its gusto, if you will. And now that I've got kind of more time, I was like using that. And then during the summer months, spend a lot more time with my family, doing family things and just trying to enjoy them during the summer while they're home more often, things like that. So we're working through like a lot of different ideas on what I want to do with the stream and whether or not I want to continue to do that. I've already expressed in the past, this is nothing new, but I've expressed in the past that if AMC has this big move, then I may be kind of out or done. And that my real commitment was through February 2026. Now, I haven't talked about that for quite a while now, so it may be a little bit of a shock to some people. They're like, oh, you're just going to like stop? Well, again, I don't know exactly what's going to happen in the future. I try not to like predict the future too much. But there are things, of course, that you can predict, right? Like what are you investing in? Like what are you doing with your time? How do you want to grow? What do you want to do in the future kind of stuff? And I've done a lot of those evaluations in the last few years, and I've worked on, I guess you could say I've worked on myself a lot. That's a bit of a weird, I don't really like that mentality, but it's fine to say it. And there's things that I want to do, and there's things that I'm not so sure I want to do in life. So I have ideas about what it is I'm actually passionate about, and then there's things that I'm just doing because I fell into it and I kind of enjoy it, and I'm not sure. And streaming is one of those things where I feel like it's a decent fit, but ultimately it cannot sustain anybody unless, right, you have, I don't know, 20,000 to 100,000 followers. You're probably not going to be making enough to live. The fact is that if you don't know, streaming only really provides me with about $100 every other month, which is a very, very little amount. And that amount is not enough to live off of, as I'm sure you're aware. So I've had this conversation with you guys before, because there's been times where I was like, oh, well, they allowed me to do memberships. What do I want to do with that? And what I chose to do was basically like invest. So my time was, I'm going to trade stocks, and what I'm going to do is try to make that my primary income, and then use the stream as like a way of doing like charity, and essentially working with my Dojang. I was able to set up like a charity fund. No one's taken advantage of it. We've given people opportunities to do that. No one's taken advantage of it. Some things just take time, and some things are good ideas, but then you have bad execution. It doesn't work. And then sometimes it's just time. Like it just takes time to start stuff. And you have to have the right opportunities to present themselves to really get it going. And I think the opportunity part is missing right now. Like we don't really have the biggest reach here, and I'm not really taking the time to like do outreach. So we haven't really struck an opportunity there to make a huge difference. Instead, it's been more or less just kind of a one-off effort, proof of concept, and we haven't even been able to execute that, which isn't ideal. So I was in a position where I'm like, hey, I'm not really making any money from this streaming stuff anyways. So I might just, instead of like trying to make it some kind of an income, I might just donate the proceeds to something that I think is meaningful and could impact people in a good way. And that's the choice that I made. But I haven't updated that on that in a long time, because it's not really gone anywhere. Like that's the truth of it. Nobody's really taken advantage of it, and I don't know if it's because I don't know. I don't know if it's because it's a pride issue or something like that. It's very odd, because you do have a lot of people that, especially in recent months even, that come in and say, well, it's just too expensive. And it's like, okay, well, we do have this, thing that's going. And it's like, yeah, but no, I don't know, so I can't control what happens with that, but it's still happening. So the option was I'm either going to continue to stream, which, and I'll be honest, you guys are probably saying, well, yeah, but it makes you like $100 a month. But what about all those like times that people have like just gifted you money or something like that? That happens, but it's pretty one-off. I think last year when I did my taxes, it was like maybe like 2,000 total for the year. So here's the problem. You have a huge amount of time devoted to which I really appreciate you guys that are still even here listening to me. Like we had like 30 to 40 people earlier and it's like cut in half right now, right? But you have a pretty small audience and you're devoting like a huge amount of time to that audience. And if you're not doing well with your primary job, which is not the stream, then this is really like a side gig. And if you're not producing with your primary job, I don't think it's really wise in general, like as an adult, to then devote all of your time to this secondary gig, unless you're trying to make this secondary gig the primary gig, right? Which I'm not sure I really want to do. And I've said this before. So I'm being a little long-winded, gabbing on about it. But I've said before that I really wanted to see this through because back here when it popped to $12, I've been in this since November, and I literally got into the streaming and the video stuff right when it was dumping from here. I mean, it was right after that, that I was like investing time in this and started doing it. And I have since like cleaned up my videos. I don't think I have videos going back that far anymore. I used to. I've cleaned them up a lot because it's the format's changed and what I talk about is largely changed. And, from here to here, I mean, that's a huge amount of time to spend. I've probably done thousands of hours, charting it. And it's not to say it's not worth it. I do believe that a lot of it comes from the knowledge. I really do. And I'm in a significantly better place than I was in terms of trading than I was back here. And even back when I started all this in April, I got it in the second run up, not in the bottom. Even still, I don't believe that it's wise to try to continue to do something in a very crowded market if you're not offering something that's of value that can't be achieved elsewhere. It's like trying to enter like the Coca-Cola market and create a new line of colas. And it's like you have certainly a possibility that you're going to do very well if your opportunities are there and you want to do it. Like if you really want to do something like that. But if your main goal is just to make money or to just have a side gig because you're making money elsewhere, it might make sense for some people to stream, but I think for most it doesn't really make any sense. Like it's not a lucrative career option. And it's worse so on things like I think YouTube than it used to be, for sure. So it's strange because I'm like, I've got this channel which has millions of hours. I mean, it's insane of views, like not millions of views, but like hours of views. And that's a pretty impressive thing. I mean, a lot of people never get to that point. And also you're like, you have 3,000 people that subscribe to this channel. Why would you like leave it? Turn it into a cash cow mine or something like that. And I've really avoided trying to do that. I've avoided advertisements. A lot of people have told me like they don't care. They're like, just put advertisements. I don't care. You make some money off of it. We're not offended by that. I know. But again, it goes to why am I even doing it? And I started back here and it changed a little bit over time. But why I was doing it was really to better myself with education and also to just do it. You know, you find yourself in a situation where something's clicking and it's working and you're just doing it. You're like, you know what? If it helps people get through this crap, maybe it's a good thing to do. You know, maybe this is going to be the best thing I can do right now. And we've had pretty much nothing but downside the entire time. So do I want to leave on a high note and abandon people? Well, no. I wouldn't want to leave on a low note either. I think what would be most appropriate would be to see through a move that we've been anticipating for a while. And at that point, if I need to make that transition and move away from it, then that's something that I can do. I think with some confidence and suggest that, listen, like this is already what I thought was going to happen. If it comes up here and we're at $13 or something by March or May or something, and it's like, I don't think this is the best trade in the world, right? And from here on, I'm not saying you're on your own, but you probably want to just consider this is like not the best trade in the world. You know, like just be done with it. Because I'm going to be done with it. Like I'm not holding on to this forever. If it has opportunities in the future, like the far future, where, you know, maybe this hits a lower low here, it's probably going to be a macro divergence. You know, we're seeing this on the big picture right now. Like this is going to be a really potentially very strong move. If it hits a spring right now and the RSI dips low, but not so low, and then it hits, you know, a rebound, it's going to be a big move. But it's kind of like that to me is like the last major hoorah in what could be like a really long-winded channel. I mean, from that point forward, you're talking about another several years and potentially going to 2029, 2030. This thing could be working itself out back down to like $4 where its pricing is until maybe later. I really don't think I want to stick around for 4 years again. Another 4 years, I should say. And that's 8 years of my life, right? And I think hopefully a lot of people can understand and respect that and understand that, like, I have other goals. I got to provide for college in 10 years. And given the state of my own student debt, like, I don't want my son to have to deal with that. And I'm not trying to do handouts either, but he's my kiddo. Like, I want to be able to provide that. I want to have a decent retirement. So I want to be able to kind of build the quote unquote nest egg or whatever people talk about. And those are things that we're not really getting at right now. We're kind of just making ends meet. My goals financially have been overall met, but they're pretty low bar. And so I've been able to keep it that way. And then basically at this point, it's like, well, I've kept it that way and it's been good, but we're not making extra, which means I can't put stuff away. And that's not where I want to be. And the only way to do that is either to truly trade full time, which really does not demand streaming at all. It's completely irrelevant because in a stream, I'm addressing what other people want me to talk about, which is fine. Like, I like doing that. Again, that's what the stream is about. But it doesn't really allow you to day trade. Day trading would be very boring, like on here. It'd be me waking up at 5 to 6 in the morning and finding the best trade of the day that I want to try, and then trading for maybe an hour of the day, and then that's it. That's what most day traders would do, and then wait the rest of the day, see if there's another trade set up. You may have 2 to 3 trades a day, but that's it. And it's not a format that people necessarily like. I've done it before on here, and we had some pretty, I would say, like, wishy-washy response to it. Like, there was very certain concentrations of people that, like, really like that, and then there's other people that were like, I just came here to look for this, or I just came here to look for that. And you kind of treat you like you're an on-call doctor or something. Like, I just want you to help me with this one thing, and then I'm out, peace out. And it's like, okay, but that's not really how I'm going to make any income. So I've been looking at other jobs. I've been looking for other jobs. My animation stuff's pretty dead. I think AI killed the business for now, which doesn't make sense because AI animation is largely garbage, but I guess people don't care about that when they want to get stuff for quote unquote free. It's not free. You're using a huge amount of resources when you use AI, but people don't seem to care right now. And then also, like, the value of the arts has always been kind of meh. It really depends on who you ask. I don't really want to get into a huge debate about that. I don't really care to debate it. I know what I care about in life. I know what I value. I value the arts. I value media, entertainment, all that stuff as it pertains to like telling stories and in influencing and all that stuff and how we relate to those things. I love that kind of stuff. I'm very passionate about that and the idea of like beautifying things and like taking ideas and making them better and all that stuff. But I haven't been able to land anything that I really want to do in a while. And I've been working on a personal project with a friend of mine for like 4 years. And we're almost done. And it's kind of like the magnum opus of my time animating because it's a 5-minute long animation. It's very long. And it's a story about loss and about love and stuff like that. But the stuff like that. Just little things like death. But the nature of that, again, has become more of like a side gig. It's not like primarily income. So I really need to find a job that's going to be good for income, and then side gig is side gig. I want to try. I really do want to try. I want to see if I can make day trading work. But I also think that in addition to that, I could probably pick up a part-time gig, even if it's remote or whatever. And that could be something that gives an additional like constant income stream that could potentially fuel like an investment account. And I'm comfortable doing that, but I'm not comfortable doing that and streaming at the same time because streaming takes up, again, 2 to 3 hours of the day, sometimes even more. And again, the output from that, although it's a great, I think there's a lot of positives from it that I really do enjoy. I think that it's not money. Like the money is not a part of that. So if you're wondering, it's not. It just isn't. So the future of the stream, I think it's got to look different. If I do any kind of continuous streaming, I've had people express to me that they don't want me to just stop because I'm their favorite stream person or whatever for this kind of market stuff. I get that. But once we get to this place where we're pushing up and we're at like $10, like I said, it may get up there. It may hit 1960 to 20. And that's a possibility, a very real possibility. You could do it right now. I could do it in February. But like after that, it's kind of like, from here on out, it's sort of just more of the same. We're talking about downside again. And I don't really feel comfortable again, doing that for another multi-year session. So day over day doesn't make sense to stream. I think I don't want to completely and totally leave it. That's where I'm at right now. And we'll kind of address it more as we go into the new year. But I wanted to sort of breach that topic and let you guys know what I'm thinking about so that you're prepared. And when the time comes, you're not like, what? And I don't think, again, this is a huge impactful thing for a lot of people. I think for most people, it's like, okay, let's find somebody else. And that's fine. For some, they're like, well, you stink anyways, so who cares? And then for others, it's probably going to be an adjustment, I guess. You get used to a habit, and then you don't want that to change. But change is necessary. So we have a great opportunity, in my opinion, ahead of us. I do genuinely think that something like a Wolf Speed or an AMC or a GME squeeze is very possible and likely. And, looking at some other things in the market, a big August followed by a kind of a cruddy end of the year into a Santa rally would be great. But we're still looking at a couple months of downside after a potentially big August if we get it. That's a big if. But if we get it, then September and October might be kind of a drag too. So we're going to have a lot of downtime to kind of work through things. I'll let you guys know what's going on and I do appreciate the support. And I don't think it's hollow support, by the way, just because there's not monetary anything or other. That's never what I'm saying. I'm saying that it's just a practicality thing and about financial goals for myself. So it has nothing to do with anything with the support. I feel like the support that the folks have given me has been really, really very kind and helpful. So anyways, on that note, I'm probably going to peace out. And this is my kiddo's last day of summer. So we're going to hang out, and I'll keep the tabs on the market. I'll check in on the Discord this afternoon maybe. I have, again, concerns about potential hooks here, and I already talked about that. I think we're going to wait, just kind of have to wait it out and see what happens. Not super confident that we're not going to see a second drop here. I'm feeling like it needs to happen, but who knows? And then I think we're ready to go, probably by next week. I think we should be in a better place to maybe see a bigger August build out. News probably got to be there to some degree if we're going to get it. I don't know what the news is going to be, but it's got to be there to some degree. So nobody's leaving you forever. I'm not saying I'm done. I'm just saying it will change. It has to change in the future. So anyways, for now, same old, same old. I hope you guys have a great day, and I will talk to you later.